Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the gold market. Well, this week, the fundamental background for the gold market is more interesting than the technical one. Well, in general, technical is also interesting, but we're mostly covered it through the week, through the previous week in our daily updates, and not much to add in this video on the short-term situation that we have. So, but fundamental background for the gold is extremely interesting. So, if you will find the time, you could read our report. It's not really very big, but two major problems then analyzing of the gold. So currently we see in the fundamental factors the big divergence between some break between the stock market, that's financial component of the real economy that works like the indicator of the condition in the real economy, and the real economy itself. If you'll take a look at the copper gold ratio, you'll see that it shows no reaction on any measures that's coming from the financial sphere. I mean, the Fed stimulus, some big progress on the liquidity injections. Nothing makes an impact on this ratio. It means that no impact is made on real economy. In the background of the just awful payrolls data, well, we suppose that they will bounce up next month, but still it should be analyzed what's really going on in the employment sector, because it's a really sophisticated cluster of data, because it includes the people who have the partial jobs, the people who despair to find a job, the people who stands on the unpaid vacation, those who do not search for a job but sit on the on increased dole that's now stands approximately $4,000 compared to the previously stand $1,500, and the people just do not want to work. They will sit till July and getting this $4,000 instead of the searching for a job. So, in two words speaking, this is well, it's really sophisticated cluster of that data that needs to be analyzed, and what really will happen in the nearest future. But currently, we definitely could say that the overall situation is not simple, and hardly will be really fast improvement. Probably we'll need months and months to return back to the previous situation. Second, as I said, is some divergence between the stock market and real economy, and we think that this divergence stands on the mass liquidity injections that now big transnational companies, financial companies put in the stock market. It smells like this easy money, and they just put them in the stocks sooner or later, but this divergence should be over, and the opposite effect, the convergence effect, should be extremely painful for the stock market. So, and finally, the third subject is the national debt of the United States. Everything is financed by the issuing of the United States treasuries. Now Fed is buying back the major part of this, using its collateral and printing the money. But the question is, well, now how long it could last? Because investors right now starts to real worry on value of the United States dollar, on its the national debt, if you do not talk on public debt and corporate debt as well. So it now comes to the just outstanding levels. That's not a problem. So all the stuff, as we suggest, has the supportive impact on the gold market. Maybe we'll not see the explosive rally, but demand for the gold should stand for a long-term period. I think that more than the year probably will be enough demand to keep gold on the surface and to support some gradual upward action. That's what we have in the long term. In the shorter term, on the background of the situation, as we called it in the last week, on the coming back to the life, some optimism is rising, and that could pressure the gold a bit. And we see that speculative position was closed partially, so the retracement could happen on the gold market in a few weeks. Would not exclude that, but that should not make an impact on the long-term trend. In the shorter term, daily chart case, we still will keep an eye on the same pattern that we discussed for the previous week because it still stands valid, and we do not see that it is over yet. So we have clear bullish signs. This market shows the triangle pin and consolidation right around the previous top. That's definitely a bullish sign because when the market turns down on some retracement, it usually shows fast reaction. While market stands here within the 3-4 weeks already, it means that market is preparing for a breakout. And here we still will be watching for reaching of the 1770 target. So bullish dynamic pressure is still valid here, despite that we haven't got the breakout on Friday. On the 4-hour time frame chart, there are two things that we will keep an eye on. First of all, you can see markets forming the channel here, although the overall price action not as fast as we would like to see it, but still it shows the gradual upward action. And next week we will keep an eye on this conference support around 17 area, because it is crucial for multiple moments. First of all, it's channel itself. Second, this conference support is crucial for upward action. Finally, this level is crucial for triangle pattern that stands on the daily chart. So breaking of this level also will suggest that the triangle is broken down, and well, it's not a good sign for bullish sentiment. And to keep the bullish sentiment, market has to hold above this conference support. Second moment, if this really will happen, the market will show bounce up. We will keep an eye on the target. So we have the minor XLP target is 1750, but major targets, as we said, stands at 7%. So there's two moments that we'll keep an eye on the gold for the next week. And let's see what decision investors have made on the employment data that have got on Friday, because it was the weekend. Investors could think about it, analyze the data, look at the components of this employment report, and probably make some conclusion on this data. So we probably will get the result on the next week already.